Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-trading session update for Wednesday, August 14th, 2019. It's 2:20 right now. So I'm doing the video, just turned 2:20 p.m. So we have a 40 minutes to go. Days like this, I figure I probably can't do too many updates. So posted my thoughts in the trading room. I'm going to share some of those charts for you here, and what to expect going forward, because it's times like this when volatility spikes that if you're in the market, you can either make or lose a lot of money, and you can do so in very short order. So there's a lot of money to be made during periods of high volatility, and on the flip side, a lot of money to be lost if you're on the wrong side of the trades. And at the end of that, I'll just say, of course, if you're unsure, new to trading, two options. Stay aside, watch the action, learn, look at levels. I'll post analysis. I always give you my thoughts, right or wrong, and so you can learn from my mistakes. You can learn from the successes. If I'm right, so I'm going to show you levels that I'm watching, and the other thing too, as I said earlier, the key to trading or investing, or I might have posted this in a comment under the front page today, is keep things light. You don't have. That's the other way to be able to swing a market when you have these 2-3+% intraday price swings without being shaken out of your trades. So that's the other benefit there, is just instead of trading your usual position size like you might, let's say you're long in a trending market like this, where you have these little candles every day. The key to trading this is to use smaller position sizes. So therefore, you wouldn't have been squeezed and feeling a lot of pain on yesterday's apparent stop run, or market pump by the the White House by coming out and spinning once again when the market gets in trouble, spinning some positive, trying to release some positive headlines on the trade wars. All right, so let's just look at the charts, focus on the technicals. SPY daily chart right here. The bigger picture on this is we have, I'm going to zoom in here a little bit. We had the breakdown of these trend lines. Remember, we have an uptrend line off the lows. Again, daily chart of SPY right here. Broke down with a gap, hit the 200-day exponential moving average twice. We breached it intraday, but we closed, hammered off it, or closed on or above it, actually on 3 different days right there. Then we had a back test of the trend line, another back test yesterday in that pump, and now we're moving down. So we're still, you guys know, if you've watched my other video, you know my thoughts, you know where I think we're going. So let's just, I won't even say that over and over again. But we are within this range of consolidation. So trying to look at it from an objective lens, I have my thoughts where we're going, but we do need to clear this range, to the downside or upside. It's just, it's been a trading range now for a while. We still have that key 200-day exponential moving average above, but here's the thing: we hit it again today. Usually when you go down, either you hit it or you'll slightly undercut it and then regain it. Usually that's a one and done type thing. Anytime I see a security tapping on support, when you have a trend line, let me just turn all these off. Let's just say you have a trend line or a moving average. They're both support, and you have a security that hits it, and this is years going by, a couple years there, and then comes back, hits it again, comes back, hits it. Towards the end of a trend, the momentum starts waning, and you hit it, and then you hit it again quicker. Whereas back here, it might have been months between visits. And I'll show you. I'll give you an example instead of drawing one out. Just look at the weekly chart of SPY. Let's even go to a longer term chart here. Here's a couple visits. We had it here, but when you really start tapping that level, this might not be the perfect example. There's some other stocks, so let me just jump back to what I was having. There's other securities, and sometimes on different index charts I didn't have one ready to show you that example. But just going back to what I was talking about on the daily chart, it's the whole nature of wedge patterns and things like that. When you have an uptrend, during the trend, you have these vigorous rallies, strong moves off the trend line, but as time goes on, the rallies are less vigorous. The trend is still up, but you're losing momentum. That's what these guys are all about down here. These are momentum indicators. That's why they're a big part of my trading. And they tell me, as do these divergences, when the momentum begins to wane. And at what point do you look to stop buying dips on pullbacks to that trend line and then look to position short on a break of it. that's where the momentum will tell you, and that's how technical analysis can be used. It's not 100% effective, but can be used to predict the future, where prices are going. Whereas some people say that's impossible. So again, it's no set rule, but I usually say when you have clean divergences plus a sell signal triggered, the probability I would say is easily over 90% that that's going to play out for a correction and a trend reversal, especially once you have that sell signal. It's not just the divergence that can go on for a while, but it's the divergence then coupled with a sell signal and other bearish technicals. All right, so back to the charts. Let's talk about where we're at today. That's the bigger picture on SPY, and then QQQ had a comparable trend line. Here, I'll keep this video for members, so we'll look at the trade here, the official trade. Comparable trend line off the lows. However, QQQ, because it's chock full of technology stocks and the market-leading FANGs, they've been a lot stronger than the broad market. We're seeing deterioration in the stock market internals. So fewer and fewer stocks have been lifting the markets to new highs, and that is the signature of most tops, or at least before a major correction. And that's why QQQ, the chart, has been stronger. The highs were higher than S&P 500. So it got a little ahead of itself, and so when it corrected, unlike SPY, which broke trend, QQQ, as I highlighted recently, fell right to that trend line and bounced off there. In fact, a member had pointed out back here that trend line to me, and so I added it to my chart, mentioned it that day, and said, look, if we get a reaction, which we certainly did, you zoom in, and then you had that, what I consider a third and confirming reaction. That's reaction 1, reaction 2. I always say any 2 points can be connected at random, so I like to see a third reaction, which you had there, and then a fourth, fifth, and we bounced, but here we are. We're back to it already. This is signs of a bounce getting sold into, if you will. Okay, so that's that, and I've mentioned quite a few other bearish developments recently. I won't go into it today. I'll just say this: we're back at support. As I like to say, support is support until unless broken. So from a daily, for a more powerful sell signal, what I mean by that, something that would most likely indicate that then that first target at minimum is going to be hit, maybe that second target, and I may revise that one. That's only an unofficial target or a potential target. This is the sole target now. That would be a break and a solid close below, not a break and a close right here. That would be a sell signal, but as I like to say, it's certainly slang, but I like to say the redder the better, meaning a big red candle. This would certainly look better than this. Or you take today's candle right here. We're still on it now, so we're still above that support. And when I say a daily close, why? Because it's very common, any time frame you're trading, whether it's a daily chart, a 60-minute chart, to have the prices shoot below support on an intra-period basis. This is a daily chart, meaning so each candlestick period is 1 day. 60-minute chart, every candle is finalized each hour. So therefore, you came down, you took out the trend line, you even briefly undershot the 200-day EMA, but then you reversed and you closed right on it. This is not coincidence. None of this is coincidence. In fact, I'll tighten that trend line up right to the bottom of that. That's where it should come in now. You have the bottom of the body there, the candlestick, the shadow right there, or the tail down on the downside, catch another body, and so far we bounced off that trend line again today. So I'm going to go over levels. So that helps to validate it, these reactions, whether it's the body or the candlestick shadow that you have a reaction on. The more the reactions, the better. So it just helps to further validate that. You still have the 200-day below, but that's what I'll be looking for. And if you get that, whether it comes today, tomorrow, next week, or months from now on this same trend line, if we rally, go to new highs, then that's still a trend line I'll be watching to see if and when that breaks for the next sell signal or additional bearish evidence on QQQ. And again, because this is a daily chart, anything that happens here is more important, has longer term implications than an intraday time period like a 60-minute chart. So those are levels I'm watching. PPO's made a bearish cross. Everything else I've talked about, the recent price action. Let's look at the 60-minute charts. There's that trend line I highlighted earlier today. We went through it. We had a couple reactions on it, fell back down. So we're back below there. We're also below, but right about on. There's that gap. Remember, that's a pretty big level. So this was support here, the bottom of the gap from Monday, August 5th, I believe it was. We tested it several times to validate it. Finally had a breakout and didn't just limp around. We had a big rally after the breakout. Came, tested it again, another successful test. Big rally there. Yes, news induced, but it is the charts. They kind of go hand in hand. You just have to, or at least I do, accept that. One may be the catalyst for the other. Sometimes I've seen chart patterns break out, and then the media will come and retrofit or try to just slap a headline on citing a cause for a rally or a sharp correction in the market when they have no flipping clue. I cannot tell you how many times I've seen that. I could almost write the headline. So I've never seen them come out and say they have no idea why the Dow fell 300 points today or rallied. They're always going to pin a headline, and there's always headlines floating around there, and you can pin one to any correction or rally if you want to. So that's that. And then my point is sometimes, the technicals, the news will line up with the technicals, and you get that. So that was yesterday's pump from the White House that, oh yeah, we're going to back off and be nice with China now on the trade wars for the time being. All right, so now where we're at is we remember support once broken, that's that 183.50ish level. Support once broken becomes resistance. So you can see what's happened so far intraday. We broke, had a lot of momentum. Remember, you're going to get a momentum fueled overshoot. We bounced back, but so far we were rejected. We're starting to move lower. And then I'm going to give you some good stuff here. Let's just jump into these intraday charts. Let me move things around on my screen recording software. And okay, what I want to do is go about half an hour ago in the trading room under the day trading group. Could have been under swing trading because, I said ES and NQ, those are the futures, have both bounced back to these downtrend lines, offering what is likely the last objective short entry or add-on for the day, as I suspect the indexes will turn back down soon and then go on to take out today's lows. So likewise, if you're bullish, favoring a bounce, you could go long on a breakout. I stated my preference, and but I'm done this long enough to know that I'm going to be wrong at times. So maybe break out, maybe we do. Maybe it's a breakout and a fake out. I'm sitting tight for right now on my swing positions, even if these were taken out. So there's the trend lines, and what you're looking at here. These are intraday charts. I have on the top a 5-minute chart of ES and NQ, 5-minute period candles, and then a 1-minute chart down below. They're the same trend lines. They carry through. If you draw it here, it'll come through here. So this is sort of a zoom in, if you will. Take a little box tool, and you're looking at probably this right here down below right here, and then same down here. So that's it. So we had rallied back. It's what I believe will be what we call a dead cat bounce. That's an expression. Please don't take offense to it if you're an animal lover. I am as well. But it just means that you drop a dead cat from high enough, far enough, it's going to bounce, and that's an expression that during a bear market or a strong correction, bounces are usually sold into early. They don't go very far. That's pretty much what that says. Either way, it's objective. You short, and I post it in the day trading group because if you're a day trader, I know most people don't want to short when the futures are down. There's the NQ down 2.8%. But I do, as I made clear, I think we're going to take out the lows and go lower from here. It's going to be a 3% plus down day. So that was then. This is now. That was 2 o'clock, almost on the button. It is 2:33 now. Let me drag things around down here. Let me change to this and see if I can drag and cover those charts. They're down on the bottom here. There we go. Probably making you dizzy right now. I'm just trying to catch a part of a bigger monitor. So these are the same charts I just showed you right here. And so when you look in, that's where it was right there. So we had a rejection. At the very least, it helps to validate those trend lines I drew. We had a pullback and then a second attempt. In fact, we even tried to pop them. Well, at least that's on ES, not NQ. And you can see NQ so far 2 rejections. So that's where that short day trade op was. Doesn't look like much because based on how much we've already dropped, but on NQ alone, if you look at where we hit that first back test, that's a pretty good pullback. If you're day trading, I don't need to tell you that. The key to difference of day trading and swing trading. Day trading, you take a much larger position size because you don't have overnight risk. You can close your positions out at the end of the day, and therefore you don't worry about a big gap against you. So you can take many times what you do on a swing trade position because of the lack of any overnight risk. Use tighter stops, go for smaller, percentage gains, and in and out. And then finally, I wanted to share my thoughts where we are in the bigger, or not even the bigger picture, more of the near-term picture of things, if you will. I'm talking this week, today, tomorrow, next few days into next week. I'm going to tell you where I think we are, and I know that comes at the risk. Sometimes people will, take what I say and put too much stock into it, um, or too large a position size or hold to it. Remember, trading, the key to surviving is, use stops. Don't use leverage, especially if you're new to trading, investing. Don't put all your eggs in one basket or too much in any one trade. All right. So with that being said, we've had just one bearish check mark after another. All three that oh no, I'm sorry. The two of the three that I mentioned yesterday, the fade of today's candle, then the move back down below those gaps from Monday, August 5th, and then finally will be, like I said, I believe the nail in the coffin and break below the recent lows. That will have taken, for example, on QQQ, if we get that, again, that third and final check mark, a couple things will happen. We'll be below the trend line, number one. We'll be below the 200-day EMA, which has already produced, two reactions, a bounce off there, and we'll have undercut those recent lows. So my expectation would be a swift move down to here. What does that mean? Swift, days, just a couple days, or to a few, probably not much more than a week, if I'm correct, and that's about another 7.3% drop. So I'm doing this video to tell you, when I started trading years ago, I never wanted to, short when the market was already down 3%. Even if I had shorts, I didn't want to add, and especially if I didn't have anything. But I've come to a point where, if we're at where I think we are, again, I don't think it's too late, and that's why I added that SOX back. That was my bad, guys. I SOXX on that trade. I came back from the dentist yesterday. I missed the open. Markets were up, and I just focused on the QQQs. I didn't have any alerts set here on this trade, and I didn't realize, and this is in nature. And that trade, we had a stop down here before, and I moved it up because things were looking good. And I even, I said it a couple times in recent videos. The risk is omnipresent. It's always out there that you're going to have either a Fed mouthpiece come out, whether it's Powell or another one of the Fed governors, come out and try to pump the markets with some dovish speak when they drop. Or of course, we all know Donald Trump doesn't hesitate to fire off a tweet, when he wants to lift the market or stop a correction. So, or any directive may come from the White House, like yesterday. I don't know if he tweeted out the trade war stuff. I think it was a press release from the White House. So that happens. That's part of the game. Had I seen that yesterday, I would have added that back, just like QQQ short. I thought, I made it clear that I thought it was an objective shorting up. So my apologies for not catching that, and I would have communicated my thoughts. The stop I had raised to 44.90, and we hit a low of 44.62, which on SOX is hardly anything. It's a brief dip below. We pop below it, and there's another example why sometimes I'll use stops based on a daily close. That would have avoided that stop. It would have pierced 44.90 and then closed back above it. Either way, like I said, I added it back today only because, as I said, simply from a risk-reward perspective, there's still to my third target up there about 37% upside, and I'll keep that same stop because I think the market has no business. If the bearish case is, if my read on the market is correct, we have no business taking out yesterday's big green candle, moving back above it. That is. So you're talking then only about a 7, less than an 8% downside there. So that's why that one went back on. Finally, it's been an unofficial trade. It's crazy. The unofficial trades have been, rocking this year, and every time I'll finally pull a plug, the last TVIX trade was stopped out. But I've set targets, and I've shared my thoughts all along. TVIX and VXX, I've shared this chart in the last few weeks, and it looks great. And it's going to look better if markets continue down and finally give me that final check mark here with a break below the recent lows on SPY and QQQ. What looks great when I look at this chart? Well, I see a primary downtrend line right here, and within that a minor secondary downtrend line. I see a big divergent low. Remember, looking at the VIX or a VIX tracking ETN is like looking at the stock market upside down. Where the stock market I had negative divergence into the highs, the VIX you have positive divergence because it's going to move inversely. So what did I see? Well, bullish event number one was a very clearly impulsive breakout. 2 big green candles. Then we hit the trend line, closed right on it. Then we broke out and we back tested recently. We're consolidating. Remember a minute ago I showed you on the markets, QQQ and SPY, we have this recent area consolidation. This is a near mirror to the indexes. So if I'm right there and we do break down below and we start to have impulsive selling, VIX is going to run My next target here will probably just pass right through like it's not even there. That's 24.74, but that alone, even from where I'm doing the video, is another 11.25%. And then this would be my target after that. So if the markets take out the lows, in other words, another way to say this, I think if that QQQ trade hits the first target at minimum, we're looking probably at about another 50% upside here in the VIX, TVIX. This is a leveraged instrument, and it's leveraged on one of the most volatile indexes out there. This cuts both ways. Anything that you might make 50% on in a week or so, you have the opportunity or the potential to lose that much, or close to it very fast. If the market were to rally, the government comes in and makes some crazy measure. I wouldn't put it beyond them. You can't trade around that all day. That's one thing. I don't trade with fear. I don't trade the fear of what Trump might say, what the market might do. I trade the charts. And if the charts are strong enough, any gimmicks that the government does right now will only prove to be fleeting, just like yesterday's attempt to lift the markets that was faded today. And again, because of that, that's why I'm even more bearish now, because that has played out. So that's that. I want to just share that idea. Will I add it as an official trade? No, there's no reason. It's because it's going to be an overlap to SOXS and QQQ. In other words, I'm either right on the market, and then the QQQ trade and the SOXX semiconductor trade, they both play out, or I'm wrong. They're both going to get stopped out and lose, and then this won't pan out. So this is unofficial, and again, it's very aggressive and speculative. If you were to take whatever your number is, let's say it's $10,000 in a trade like QQQ, you can take $2,500 in this thing and still make as much money in your pocket, but you're risking a lot less. And that's what I talked about earlier about the key to trading volatile, sharp markets is don't try to hit home runs. Don't see dollar signs and get greedy, because as you probably heard the expression, bulls make money, bears make money, pigs get slaughtered. And so that's my advice for the day. We'll see where things go. Let me get this video out to you guys this time, so you will get it before the market closes. I had one yesterday. I was trying to get out before the market closed, just didn't have enough time. So. And I'll probably continue. If there's anything big before the close, I'll do another post market update today. Otherwise, let's see where we go from here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.